Hi, my name is Kris Venezia. I'm an advisor at Eckman Wealth Management, and today I'm going to be talking about the Federal Reserve and their November decision. So let's get into it. The November decision, the Fed decided to keep rates, the Fed funds rate unchanged, so that's 5.25 to 5.5%. That was largely expected by the market, so you didn't see a huge move. If you look at the major indexes, there wasn't a major move when the statement came out. Where you did start to see some activity was once Chairman Jerome Powell started speaking. And the big thing that happened afterwards is you saw bond rates, you saw yields on US Treasuries, you saw those drop, especially the long end, which had really gone up a lot. I guess they dropped across the board, but a lot of the focus was on the long end, the 10, the 30, seeing those rates drop after such a big run up was certainly something that had a big impact on the market. And of course, you saw especially the tech heavy stocks rally since then as you kind of see rates come down. The big takeaway and what you kind of saw in some of the market forecasting there was the expectations for future Fed rate hikes went down as Jerome Powell spoke. Uh, a lot of that really due to Chairman Powell focusing on this holding rates steady. And it's something we had heard from more Fed members. Certainly, there still are some hawkish ones, Neil Kashkari of Minnesota, who certainly have sounded more hawkish. There was a dot plot a couple months ago that certainly seemed to forecast, a majority of Fed members expecting one more rate hike this year. This seemed to kind of push back against that Chairman Powell's speech. I'll talk a little bit about, more what I kind of took out of it, more what I guess I say I appreciated out of it is, for me, the big thing was Chairman Powell, and you're hearing more of this from Fed members, is acknowledging that inflation has come down off of its highs, still above where they want it to be, that 2% level, but just acknowledging that they are starting to see some healthy progress in the inflation fight. For a while, you didn't get that. For a while, I think back over the summer when you listened to members of the Fed speak, Chairman Powell too, you heard a lot of, we're unsure if we're kind of winning this fight. We've gotten a lot of help from things like energy prices or swings, but it didn't feel like the Fed was confident that we're really winning that battle against inflation. To me, if there's anything I'd highlight out of this speech, it was more of, there was Chairman Powell talking more about, hey, we are kind of winning this fight, and the Fed thinking they're winning this fight. I think there was a lot of positives the market took out of it. Now, Chairman Powell still did acknowledge, right, there's still room on the table for another hike. That's not out of the realm of possibilities. Really push back against any questions about cuts, which is talked more about market participants, certainly not talked about by members of the Fed. And I think the other thing there too, which I think is interesting, and this is kind of how I feel about it, is it feels like the Federal Reserve is starting to acknowledge, hey, we think we're doing a good job on inflation. And also, I think they're expecting as we get into next year some help on the shelter side. And I think there's a part of the Fed, because shelter has such a lag effect on CPI, just the way it is tabulated. I think there is this thinking from the Federal Reserve that if they can hold rates steady for several months, they're going to get some help on the inflation front from the shelter numbers. And really, shelter's been a big component of inflation because it's just held so much higher in these reports. So I think there's a little bit of that the Fed's not acknowledging, but it feels like if you read in between the lines, that's starting to come out of it. I think the other thing too is, and this is just the truth of the matter, and it's a tough thing for any investors and for people paying attention to this, is, we want answers right now, right? Like, we want the Federal Reserve to say, hey, inflation is going to hit 2% May or June of 2024. But that's just not how this works. Inflation is tough to forecast. There's a lot of stuff happening around the world right now that make it difficult, especially on the commodity side of things. So I think there's that element that's really challenging too, of the Federal Reserve is trying to say, hey, be patient, but the market and market participants, investors, they don't. It's tough to be patient. They're trying to map things out. It's really difficult to map out. I think as we look forward, the big thing, and I'm recording this on the November 13th, so the day before we start getting more inflation information. But the truth of the matter of all of this is, it's just going to come down to the data, right? It's going to keep coming down to what inflation data says, to what economic data says, right? The Fed in their statement also acknowledging again the economy being pretty strong. There was talk about Q3 in the US, which was pretty strong on the GDP front, talking about the labor market, mentioned moderating in their statement, but still a tighter labor market. It's just going to come down to the data we get month after month after month. I think the Fed feels good about the path of inflation. To me, when I listen to not just Chairman Powell, but other members of the Fed speak, it really feels like for me the labor market is kind of the next frontier of what the Fed is looking like. And I think if we're going to see volatility, certainly inflation reports are going to be there, and other economic, retail sales, what's happening with the consumer credit type surveys, certainly can have impacts as well from the New York Fed. But to me, I think the biggest thing right now that everyone's focusing on is going to be the labor market. And is there more of what the Fed wants to see, a balance in the labor market? We've started to see that in the last payroll report, where we're starting to see hiring concentrated in the areas that have been really hard to hire. You're seeing it in survey data or earnings reports where the services sector is saying that it's getting easier for them to hire people. And that's what the Fed wants to see more of. I think if the Fed starts to see more of what they want to see in the labor market, which is a loosening of that labor market, I think if the Fed, and this feels to be the trajectory that it's on when you see the real-time stuff, a slowing, not just U.S. economy, but global economy, I think if the Fed can see that labor market kind of come into balance, mixed with a little bit more of what we're seeing on the economic side, I think that's when you start to get the Fed feeling really, really, really confident that they're winning this inflation fight. And that's when they can shift, because there's that dual mandate the Fed has between, maximum employment and fighting inflation. I think if they can start to see the labor market react more in a way that they're hoping for, then I think you start to get a Federal Reserve that isn't necessarily just always talking about rate hikes. I think there is more talking about, focusing on both sides of the mandate. And Chairman Powell did kind of mention that there is, risk to both sides. It was something in the market like risk to both sides. And I can't remember who it was, but I know another member of the Fed spoke recently saying that as well, emphasizing, I think it was Waller, on the risk to both sides. So I think if you want to pay attention and you want to gauge what the Federal Reserve is going to do next, the inflation reports matter, no doubt about it. Certainly there's a lot of funky stuff in terms of surveys. There's been a lot of talk about health care services and health insurance in these upcoming inflation reports. That should be pushed more to the upside. A lot of talk about the shelter side and how that's tabulated. But for me, and what I think is really going to determine these next moves from the Federal Reserve, I think you got to look at those Thursday claims. You got to look at non-farm payrolls, take ADP with a grain of salt, but really focus on the labor side. Because just when you listen to the Fed, Powell, members of the Fed, it really feels like the emphasis right now, the economy, of course, inflation, of course, but the emphasis right now, I think, is going to be on the labor market. So yeah, that's kind of that wrap up. If you disagree, if you have opinions, if you watch Chairman Powell's November press conference and there's things that you think are interesting that I didn't touch on, leave it in the comments below. Always happy to interact and learn and dialogue with everyone. So thanks for watching, and subscribe to the page. Tune in next time. Thanks.